Jaiprakash Power Ventures Limited or JP Power is on fire. Adani Group emerging as the front runner to acquire bankrupt Jaiprakash Associate Limited, a parent company that holds 24% of JP Power, is the reason for such a high trading volumes. If this deal goes through, JP Power's entire future will change. And this is what we are going to discuss in this video. The 5 big risks for the investors. Now let's look at the financial performance over the years. The company has been making profit, but are these real profits? So let's look at 2019. This is the period when a financial restructuring was done. Now let's look at 2019 and 2020 period. This is the time when the restructuring was done. Now if you see, the interest component was 1474 crore. It reduced to 652 crore. And if you see the net profit, it was loss 367, then it was a loss of 2147. Now, if you see the data from 2021, when the restructuring was done, as you have seen, the interest component, it reduced to 400 to 500 range, and look at the profit figure. It came to profit in 2021, then 107 crore, then 55, 1022, 814 crore. So this profit is purely because of the financial restructuring, because a huge loan of around 11 to 12,000 crore was restructured, and the net liability the company had was only for around 4,000 crore. The rest of the thing was converted into preference shares. So let's understand the rights this preference shareholder has got, because that has a bearing on the equity shareholders. So more than half of the debt was converted into CCPS and CRPS, not into equity, but cumulative compulsory convertible preference share and cumulative redeemable preference share. Now this is a convertible portion. Total amount debt which was converted was 3805 crore. So 3805 crore today books में है as a cumulative compulsory convertible preference share. And इसमें जो डिविडेंड है इस 0.01%. इसमें जो डिविडेंड है इस 0.01%. So one CCPS has a face value of 1 lakh. Annual dividend 0.01% of 1 lakh. It comes out to be 10 rupees per share. And you may ask why such a low dividend? Because the restructuring was done and banks agreed to take a lower rate. Now these are convertible only after 20 years with total maturity of 29 years. So 20 साल के बाद there is an option to convert, meaning the conversion was not immediate. When the restructuring happened, now these instruments sit on the books for decades. No dilution today. Second is the CRPS, cumulative redeemable preference share. Total amount is very low, 34 crores, fully paid up, 9.5% is the dividend, and they are redeemable in installments, not convertible. So there is one convertible portion in the books of account, 3805. It's a huge amount, and tomorrow when this will be converted into equity, we will see a huge dilution in the equity part. Now as you have seen, the cumulative part carries, or the convertible part carries, a very small dividend of 0.01%. And the question comes, why the dividend rate is so tiny, in CCPS? Because these CCPS were created during the debt restructuring. Now lenders agreed to convert unsustainable debt into CCPS. The company didn't want high cash outflow. So जो अभी आप performance देख रहे हो profit का is because of this. Now lenders wanted a legal instrument that gives them a priority. And even RBI and the Companies Act requires some dividend to classify it as a preference share. So आप अगर उसको convert करें तो आपको एक token dividend तो उसमें डालना ही पड़ेगा. So they set a token dividend of 0.01%. So this way JP Power saves cash, which we today see in terms of profit, and lenders hold an instrument they can later convert into equity. It fulfills regulatory classification requirement. So the danger is tomorrow these instruments can be converted into equity, and which will lead to dilution. Now this is very important. Do CCPS and CRPS get priority over equity shareholders? Absolutely yes. This is mentioned in the annual report and in all the documents, both CCPS and CRPS are preference shares, have priority over equity shareholder for dividend, capital repayment, any distribution at winding up. Even at winding up, tomorrow if the Adani Group decides to delist or to restructure or do something with this company, these preference shareholder will get a priority over equity shareholder. These CCPS, CRPS shall carry a preferential vis-a-vis equity share with respect to payment of dividend or repayment of capital. Now this means even if JP Power decides to distribute cash, CRPS must get 9.5% cumulative dividend first. So if the company is making losses, they have to compensate. CCPS must get 0.01%. Again, cumulative dividend. Only then equity shareholder can get anything, and that you can see also in the last 4-5 years. JP Power is making profit, but they have not paid any dividend to equity shareholders. And since dividends on these preference share are cumulative, unpaid dividends stack up year after year. So equity shareholder get nothing until all arrears are cleared. तो जब तक के एरियर्स क्लियर नहीं होंगे तो इक्विटी शेयरहोल्डर को कुछ नहीं मिलेगा. Now another big risk for this standalone plant, if you see, now for the PPA, they have very limited PPAs, the power purchase agreement, the long-term power purchase agreement, which brings a very stable source of revenue. Now for this Nagri STPP, 1220 megawatt, and then they have a Bina TPS 500 megawatt. Now the PPA tie-up is only for 37.50%. Meaning it's 38% of the power of this 1320 megawatt is tied up, with PPAs. Lowest PPAs coverage, large exposure to merchant market. Now for the balanced power, they have to go to the merchant market. And in merchant market, if the prices are down, as we have seen in 2025, then they won't make much money. Second is Bina, which is 500 megawatts, 70% is tied up, relatively better, but still sort of industry. And पूरा जो power industry है, it works on 80 to 90%, PPAs, because that brings a stable revenue, and 10% they keep it for merchant. So if the prices are higher, they make profit, and if the prices are lower, even that get compensated because आपका 80 से 90 तो PPAs ही है. So overall अगर हम देखें तो 56% is tied up for this plant if both का average निकाले, and it poses a revenue volatility risk for the company. So PPA को जरा आगे जाके समझे तो low long term PPA coverage, only 56% of total capacity under PPAs, making cash flows unstable, heavy dependence on merchant market. Now earnings fluctuate sharply with spot electricity prices, creating high volatility. Plant concentration risk भी है. Most generation comes from these two plants. So any operational issue directly hits the profitability. Thermal sector headwind. The company is into thermal. So long-term demand for coal-based power is structurally weakening due to rising renewables. And finally, high fuel and logistics sensitivity. Now, next big risk is the corporate guarantee risk. Now, Jaiprakash Associate Limited is already admitted into CRPF, and that's where the Adani Group has made a bid. Now, Jaiprakash Power Venture Limited, the JPL promoter, which is Jaiprakash Associate Limited. Now they hold 24% stake in JPL. So JPL's corporate guarantee to JL still not released. So this is very important. JPL had issued a 1200 crore corporate guarantee to support parent Jaiprakash Associate Limited's borrowing from SBI. Although the 2019 framework agreement required lender to release this guarantee, it continues to remain outstanding as of FY25. So JPL की बुक में 1200 रुपए की एक ऐसी लाइबिलिटी है जो कल क्रिस्टलाइज हो सकती है, और अगर 1200 करोड़ JPL को देने पड़े तो यू कैन इमेजिन व्हाट विल बी द इम्पैक्ट ऑन द फाइनेंशियल ऑफ JPL. नाउ CRP makes guarantee crystallization more likely. Now with Jaiprakash Associate Limited now under insolvency where Adani is acquiring it, lenders may press to invoke the corporate guarantee, especially if JL's asset recovery falls short. तो अगर lenders को पूरा पैसा नहीं मिलता है तो they will ask for invoking this corporate guarantee. Now this makes the CG a real contingent liability, not just a footnote. So ये जो corporate guarantee है वो एक real contingent liability बन सकती है JPL के लिए. Any cash outflow would help JP Power's liquidity hard. Rating agency CRISIL has highlighted this, even Acute, another rating agency, they have highlighted that if the guarantee is invoked, JPVL may face a sudden large cash, payout affecting liquidity, debt servicing, working capital operation and future प्रोजेक्ट फंडिंग. अगर ये लाइबिलिटी क्रिस्टलाइज हुई तो जेपी पावर को ये 1200 करोड़ रुपया देना पड़ेगा. सो एज यू कैन सी देयर आर बिग रिस्क इन JP Power stock. First, there is no real turnaround. It's a financial restructuring. The profit that the company is showing for the last few years is because of the debt restructuring. Number two is the limited power purchase agreement. A power plant with only 55% of its capacity tied up with PPAs. Rest, it is dependent on merchant power, which is very risky for the company. And number three is the corporate guarantee that it has given to Jaiprakash Associate, which the Adani is going to acquire. So if this liability will get crystallized, there will be an outgo of 1200 crore. And just to make a disclaimer, this video is only for educational purposes. In case you want to buy, sell, hold JP Power stock, I suggest do consult your financial advisor.